Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And let's just guess the company which will be coming today at KYC, where we'll discuss the ratings as well as the management. It is a biotech company. Also, let's go into the niche of it. It comes under the vitamin D3 segment. It has that leadership in this segment. Vitamin D3 is something where you have capsules or supplements as an alternate when it comes to getting sunlight to your skin. Also, recently the company announced a 150 crore fundraise. The market cap is around 1000 odd crore rupees. But what took my interest was the stock price reaction. Stock is up 17% in the last 5 sessions, and that's where our interest came, and we got for you this company in the KYC segment. So the company's name is Fermenta Biotech. This is the company which we'll be focusing on, and the first question I'll be asking is, where will this application be? Will it be the capacity additions? Will it be just to the core product? Or will it be to the more new products coming in, especially in the green enzymes? The second question I'll be asking is this expansion plans, when are the actual timelines coming in for this? So that's something which the street will also want to know about it. Also the outlook. There is a vegan D3 coming in, and there is vitamin D3 derivatives also, and green enzymes. So what are these categories and why they are a high growth, high margin setup? That is something which the investor community wants to know. The patents, they also, do they actually put a pricing power, or is it just a commodity play? That's something we'll ask the management as well. And also the company's new product profile, current what it is, what will be the future, that is something we'll understand. Company already has 4 decades of experience in enzymes, so that will be very much important to track. But let's get into the more details, about the company, what it actually stands, what it has done, what are the origins for the company, road ahead. That is something we'll be looking out for. And let's just get about the company. It manufactures active pharmaceutical ingredients. In short, in the trade parlance, we call it API. Looking at these numbers, the biotechnology is something which they focus on. Nutraceutical products, this is their core strength. Nutraceutical products are something which everyday use you have from both vegan and non-vegan extracts. The capacity addition is of around 110 crore rupees at the Dahej facility. I had mentioned you about the 150 crore fundraise. That's where the application is happening. Expansion, looking at it, they're having plant-based vitamin D3 as well. And that's a very important and a strong growth area. The derivatives and the green chemistry enzymes, that is something which we will pick the brains of the management. And also the investment which is announced yet, it will be phased out in a manner to the next 2 odd years. So that entire focus will be also there. The strengthening of the positions is where their API manufacturing and the vitamin D3 comes in. Also, they're supporting their growth in the green chemistry and the advanced nutritional ingredients. And as more modern life comes up, more demand of these products starts coming in, especially in the D2C space as well. But they are a B2B player, just to confirm it with you. This leverages their prop tech as well as decades of manufacturing expertise, 4 to be precise. Now they're aiming to set up and commercialize this scaled production plant as well. The market is going up, and now we are seeing that the Indian process patent is coming in for the technology. And when a patent or an IP comes in, then it strengthens the balance sheet also in terms of intangibles. Investments, they're funded to be internal accruals and debt. There'll be a mix of it. But the size of the company is just 1000 odd crore in terms of market cap, largely undiscovered. That's why we have got this company in KYC. And this is the fundraise. Now, this can happen via equity, debt, warrant, and QIP. And this fundraise was announced this month itself. After that, the stock started rallying. That's where our interest came on this counter. So this is the overall funding plan which we are looking at. And going ahead also is the rating parameters where we'll be judging the company. So in our KYC show, there are 8 parameters totally. So of course, income statement, balance sheet, cash flow and return ratios, that's something we get for you. And also shareholding, street cred, which is nothing but the stock price movement, and the valuation and the outlook. These are the 8 parameters where we are judging the company going ahead. But let's go one by one to all the rating parameters, and let's just dissect the company to make it, very simplified, informed decision when it comes to you. And also the institutions who are hearing our show and KYC as well. It's largely undiscovered company, and that's why I've got it in front of everyone. Income statement. Let's look at the numbers. FY24-25, I've taken it, and the 3-year CAGR, it's been single digit, not very convincing in the revenue front. But the EBITDA, the operational profit, that has done really well, and that's what I also liked. The margins are coming in at almost 26%. But the question is, will this sustain going ahead? And nutraceutical is still a high margin business. They are a B2B player, but remember, the scope of margins increase is definitely there, and we have seen that in our modern day lives also. Net profit, there is a turnaround happening FY24 to 25. We're seeing the moves happening, but let's see the numbers, how they're panning out, the quarterly numbers. That's also something we should look at. And largely, we see the year-on-year basis, there has been a significant growth coming in. And you could see a company, when you judge these type of companies, you should take a year-on-year basis in your analysis initially and see the numbers have been doing decent. So net, I will give a thumbs up when it comes to the overall income statement. The second one is, of course, the balance sheet. And I have some concerns in this space. Of course, the equity numbers, these are the decent numbers to look at, but the borrowings, that has actually come down, but a very minor way. It's 109 odd crore rupees. But from FY24, this is a significant 30% downtick. So that is something which I really like. Cash bank balance, that has actually come off. And there's a reason for it, because these numbers will be coming down more. The reason for this is they are expanding, and the company stated that they will have internal accruals as well as debt. What will be the mix? We don't know, but these numbers will likely to go down as well. So right now, net, lower borrowings, cash will be coming down. So some working capital ratios will be impacted. So I'll give something in the neutral aspect when it comes to the balance sheet. Also, let's come and see the cash flows. Cash flows is also very much an important kind of a trigger for the company, but there's so much happening in the Capex front. So I don't see so much of, a very positive up move in the operating cash flows as well. Let's just see how the numbers are panning out, and this is just coming down, and that's where my concern also comes in. There might be some higher receivables also from the company side. The PAT numbers, that has also come, that's around 40 crores, but remember that small amount which is there, this is just the H1 numbers which I have taken. If you double it, then it might be a good, decent PAT numbers. And overall, the cash flow to PAT conversion, that is also decent. But the concern is the net cash flows here. And I had stated you the reason why there might be an impact on this. Also, net, I will still give, because there is divergence in this analysis, a neutral rating. Also, apart from the cash flows, return ratios, the data is less, and that is a caveat before I explain you. And there was some losses and aberrations in FY24, but FY23, just look at the jump from 4% in FY22, it has gone up to 23%. Now, will this sustain or not? That's what the time will suggest, how the company pans out. But generally, for an investor, 15 to 18% ROE numbers are decent. And also for this sector, I would still suggest it's on a decent path. So I'm taking the equal weighted path, and that is the neutral rating coming in for the return ratios. But then slowly, we move on to some other new parameters as well. And the next one is the shareholding. Largely, FIs, DIs, just look at it. It's blank, and blank. There is no institutional support coming for this counter, and that is why it is a largely undiscovered company. Whether it's a gem or it's just not a gem, that the time will suggest. But overall, promoters have a decent stake, and they have actually upped it. That's around 64% stake, and the retail is having roughly 35 odd % stake. So net, there is a lack of institutional participation, but we cannot rule out that in the future this can increase, and based on that, I still have some concerns, and I will give a thumbs down when it comes to the overall shareholding pattern. Also, let's look at the street cred. Street cred is also very much important. Last 1 month, 25% the stock is up. Last 5 sessions, stock is up 17%. And 6 months, it's been decent, 6% odd numbers coming in. But apart from that, in year-to-date basis, not much returns coming in. 1 year also, let's see how the move has. Stock is actually down 12 odd %. But it's a multi-bagger for the people, for the HNIs, for the retails who have entered earlier in this counter. That's 1128% since listing. So now there is a case for institutions to participate. The smaller PMS, the AIFs must be listening to our show in KYC, where we are featuring this company. So net, I will be giving this a neutral rating right now. And of course, the folks in the trading space, they did make some money in the last 1 week or so post the announcement. But let's move on. And after the street cred and shareholding, we'll move into the valuations front. So there isn't any much apple to orange comparison when we have Fermenta Biotech, they say that they are into nutraceuticals, and that's why I have kept them a bit different rather than a generic API player. And looking at the valuations, it's just trading at 9 times. Industry ratio, it's way cheaper. And 5-year average is 16 times the forward P. So still there is a discounting gap both in the industry and from its 5-year averages. And based on that, I really like the valuations. I will be giving this a strong thumbs up. So 7 criteria have been fulfilled. We have given the numbers. The last but not the least is something which the street is very bullish on. That's what we saw in the stock prices. 150 crore fundraise announcements coming in. And we'll be, of course, asking, outlook on where will this money actually go? This new segments versus the traditional enzyme portfolio. So there might be a change in the product mix in the future, and that might be an inflection point for the company. The capacity expansion plans for the plant-based vitamin D3, that is also what the street is looking at. Of course, the time period is something to focus on, and also the green chemistry enzymes that I've been speaking about. Enzymes already companies there in traditional segment. Turnaround numbers were already seen in H1 FY26 numbers. Will this sustain in H2? That is something which the street wants to know. Also, let's give the numbers for the outlook, and currently I would suggest that this would be a strong thumbs up coming in from my side. But let's revise the ratings for this KYC segment. Where does Fermenta Biotech actually stand? It's a positive thumbs up coming in for income statement, but balance sheet, cash flows and return ratios, the company needs to come up with something more. Also, we should look at a proper data of especially the shareholding part. That's where my concern comes, because there's a lack of institutional participation. Street cred, neutral, but of course last 1 week there has been a very strong buzz. Valuations and outlook, both of them, company has done well, so I've given a strong thumbs up for it. But let's just add up all the ratings, and totally we get 5 out of 8 for Fermenta Biotech going ahead. So this is the entire picture we are getting in. Welcome back to KYC, and now we are with the management of Fermenta Biotech. Joining us is Prashant Nagre. He's the managing director for this company. A very good afternoon to you, Prashant sir. First question is, company recently came out with its fundraise also. That's roughly 150 crore rupees of fundraise with companies planning. So where will this application be going ahead, and what will be the suggested timelines for it?
Yeah, thank you so much, Sharad, for inviting us to speak on NDTV Profit. It's an honor. Thank you so much. I think these are very exciting times for the country and even world, because post-COVID, what has happened is that the treatment-based approaches have now changed into completely prevention-based approaches. We have been a leading player of vitamin D3 for a few decades, and that has given us insights into nutrition globally as well as locally. We have been strictly a B2B player with global reach, and we have built a strong portfolio of nutritional ingredients going into the growing needs of different segments within nutrition, like the dietary supplements, the food, the beverages, and all of that. Now, with that, we have concentrated on gaps within the market. And in Indian market, we also found out that plant-based diets or vegetarian diets predominate. More than 60-70% of Indians do believe in more sustainable consumption. So we have come out with a plant-based vitamin D3 and completed the initial phases of production and everything. And looking at the opportunity and the scale that we hope that this molecule will have locally as well as internationally, we needed capital to expand our capacities and make sure that we meet those demands. In addition to that, vitamin D3 also is available as its derivatives, which are much potent, and they are given in very, very specific conditions where, for example, liver is not good functioning properly, or the kidneys are not functioning properly. And then there are derivatives. These are highly potent drugs, and most of what we do involves cutting edge science. Like the plant-based D3, we also got the
And Mr.
um,
Nagre, the another question
yes.
is, of course, we spoke about the fundraise you are doing on the capacity expansion, a little bit of growth outlook you have mentioned, but this segment of vitamin D3, how defensible Fermenta's leadership is there in this segment amid the rising competition? If you could just give us a flavor of it, and of course the pricing front also, will we have some uptick in the margins going ahead on this vitamin D3 front?
Yeah, so I think vitamin D3 is, in terms of competition, it is very well balanced, and that scenario has not changed. There are one European player, and then there are few Chinese players. So we in the human nutrition segment, which is the one segment of vitamin D3, we play a major role. And this is mainly we have all approvals which are international, so margins are not under pressure because it is protected by the letters of accesses, certificate of suitabilities, and the DMFs that we supply to our customers. In India, we have a large dominant role and based for the local consumption as well as exports happening out of India, which are growing. So we feel that there will be a growing trend, but not a concern as far as margins are concerned. However, on animal nutrition, it's a different market. It only contributes about 10 to 15% of what we do, and animal nutrition margins can from time to time change, and sometimes they could be even challenging. So we play that game, play the volumes according to where the sweet spot is. So the margin improvement will basically happen through the new initiatives within nutrition, like the premixing that we will do. The plant-based D3 is a very important segment. It is a niche product. It will have a different margin and premium over the animal-based D3 that has been there for many years. And most important, the high potent and low volume drugs are at a different level. So the margin improvements will happen through two initiatives. One is this entire new portfolio, which is innovative, and secondly, the market expansion, which will go into developed world as well as India, where the plant-based D3 will dominate.
All right, and Mr. Nagre, what about the API and the intermediates growth outlook? What would we expecting?
So I think we as an organization anticipate that nutrition will drive the future growth for our company, with entry into premixing being the second large organized sector player getting into premix, which will cater to the food segment, dietary and nutritional segment, as well as beverage. We expect that we will continue to grow at a healthy pace in at least double digits for next few years to come in.
But there are some concerns also in this line of business. The US trading business, something which I have been looking at, it's still loss making. When do you expect this to break even, and is there a kind of a tariff overhang in this as well?
So fortunately, the entire pharmaceutical business comes under a tariff code, which is still not impacted by the 50% tariff, which was on the Liberation Day implemented. Secondly, in the US business, the subsidiary is mainly catering to the kind of business which is for animal nutrition, and it is close to a break even. So we expect that going forward, we are also kind of enhancing it with the introduction of plant-based D3 in the US market, as well as the human D3 into expanded portfolio within the different customers there. So we expect at least it to improve in the future.
All right, and Prashant, can you just give us a breakup of your key product segment revenues, how it's going to look like, and will there be any change in this product mix going ahead forward, just the current and the future? Give us plans for both.
Yeah, so that thank you so much for that question, because we believe that our portfolio will have a contribution from vitamin D3, which is a flagship product that we continue to have. It will continue to grow. In addition to the flagship vitamin D3, we will have these three new segments coming in, which will start contributing to the portfolio, which is the premix, which will be a customized premix for large FMCG companies to dietary and nutritional companies, food players. And we will also have the plant-based D3 coming in, which is at a different niche segment with premiums which are different, and also the composition of D3 derivatives, which will have a play in the regulated market. We will play a game in the regulated market with them. So the future portfolio will not only depend on D3, but will depend on premix. Plant-based D3 will start contributing quite significantly, and the derivatives. This is one basket, which is the nutrition. But I think we also are very excited with the second basket, which is the green chemistry. We have had more than now 4 decades of enzymes, which are industrial biocatalysts, which are used. And unfortunately, India lost all antibiotic manufacturing to China, like penicillin G and all. Thankful to the Honorable Prime Minister of PLI schemes and Atmanirbhar Bharat, which is Make in India, they have given incentives, and the penicillin G production and also other intermediates have come back to India. There are at least 2, 3 players who have started and they are just now doing piloting and even commercial. So Fermenta for last 4 decades had enzymes which can go in this segment, and we have started renewed. We have also seen that in the Gulf, penicillin G manufacturers have come in. So we are seeing, in addition to these 2 segments, we have also seen that another enzyme, which is lipase, has got a role
Sure.
to play in green
And
chemistry.
and
So
Mr. Nagre,
this will be
yes,
the second
correct,
segment.
correct. Mr.
Sorry.
Nagre, now the last question I am asking is, this is from a Gen Z or a young person looking at you and assuming that they would start a business in this vitamin segment. There's so much nutraceuticals happening, supplements happening. If there is a 20-year-old listening to you right now, if they want to start a business in this segment, which is, going by leaps and bounds, what would be your views on that?
I think one thing I have always believed is quality is paramount. Okay, when we talk about my mother, who is 82 years old, she has her pills which are pharmaceutical, and she has got some vitamins and minerals. She doesn't differentiate. She expects the same quality in both. And for any startup, I think that should be paramount. And Fermenta wants to position itself as a B2B player, which will provide all ingredients and support premixes to these people, these startups and the organized sector, to provide right ingredients with right quality, with impurity profiles which are measurable. And that is what I will tell, right ingredients.
Well, that's the management of Fermenta Biotech. Thank you very much, sir, for joining in. But that's all, folks. Thanks for tuning in to KYC only on NDTV Profit.